a good group online too. And I see Ryan from NAR up there.
Well, you know Ryan.
Oh, I know Ryan well. I know Ryan.
How you doing,
well.
sir?
Good to see you.
Good to see you too.
Drew Myers is our NAR political rep for National Association of Realtors there.
Hey, Drew.
Wave again, Drew.
Hey folks, how are y'all? Congressman, good to see you.
Hey, Drew. How are you? I see Crystal from Barr there. How are you?
And
Hello,
Greg
Congressman.
Buchanan from
Good to see you.
Barr.
Okay. Hey, Greg.
Linda Gibson Cecil's from Louisville, actually. She's on our realtor party. Rusty Underwood, Barr president. Scott Duvall, Mary Duvall. And Pam Featherstone is our treasurer.
Okay.
Let's see who else is there. Jen Swindeman is from newly elected NAR director from Northern Kentucky. So
Hello, and I want to introduce my staff here. Tatum Dale is my district director right here, kind of. So just, there we go, off to the side of our video conference here. And Megan Giltonen is our new Financial Services Committee Policy Advisor. So all things real estate and real estate finance. She will be your go-to person and on my policy team and for the committee. So
Hi,
she's
everyone.
joining us from DC.
okay, there's Ron Brosser joined us from Northern Kentucky.
And you've got a great group, just by the way, for my Kentucky friends, you've got a great group at NAR, not just Ryan, but Shannon McGann, and there's a good group up there that we work with, and they work with Megan. So
Everybody can turn their cameras on. We'd appreciate it so we can see you. We've got some camera shy people, I think. There we go.
all right,
There we go.
and I see Meredith Price, my daughter's basketball coach, right there. All right. Coach Merritt, how you doing? Eleanor's going to be going to
Good.
basketball camp next week, so.
Oh, good,
Right.
with Bowers. All right. She's in good hands.
All right.
So we're represented pretty much all over the state there. So it's
That's
pretty good,
great,
pretty
yeah.
good representation. So we went around the room and introduced everybody. The people that are here are the people that are actually most involved in our political process. And so we want to thank you for taking time to visit with us today. We have, as we go around, we'll talk about some of the issues and all. But I did want to, because this is the first time you've met him, Josh just came to us from you know where the Villages is in Florida. He came from the lakes and sunset.
He's coming out of retirement.
Wow.
Just for this.
That sounds like a hotbed for real estate activity right there.
You have no idea.
I can't imagine. Yeah, with all the people moving to Florida, all the retirees in the villages.
About 1,100 people a day in Florida, and about 22.5% moved to that area.
It's a hot market right there.
I've sent a bunch of people to the Villages. This is the first time I brought one out.
Okay, that's good.
You know, when I was moving, actually, when I called the moving company, I said I'm coming from Florida to Kentucky, and the lady says, "You're moving out of Florida?" And I said, "Yes, ma'am, I am."
Well, welcome
Yes,
to
sir.
Kentucky.
Thank you.
Bring some of that economic activity to us.
We plan on it. We
Okay.
plan on it. It's an honor to be here. Thank you, Congressman, for letting us be here, and President Mike. We just want to continue to build this relationship and stay involved. And thank you for all that you do for us. We really appreciate that. So thank you.
Thank
Yes,
you
sir.
all. Thank you
Yes,
very
sir.
much. That's great.
And I'm going to turn the program over to Todd, who is your federal political coordinator. And we're going to go from there. We'll just have
The
a
best
discussion.
dressed guy. at the
You are.
table, Andy.
Yes,
I mean,
you
yeah.
are. You look good.
You just came
It's
through.
hot. It's hot out there.
It is hot.
I got this suntan at Lake Cumberland with my girls. I went down for the 4th of July and did some parades, so
Thank you so much.
it was hot.
Well, I don't really, they say I'm supposed to introduce Congressman Barr, but I think all of you all know Andy has been a dear friend of ours for years, and Josh, any issue we have, he's always got an open ear. His staff is great. You know, he takes care of us as best he can, and certainly we appreciate that. And Andy, you know, we miss not seeing you in DC, but I know you were glad to be back here with the girls. But as we were up there, you know, there's a lot of issues that we're faced with right now. You've got a list of those, and one of the biggest ones that we have right now that we're trying to deal with is just the housing supply and affordability. So I guess as we kind of kick this off, what do you see? Do you see anything coming forth that's going to help us? Because things just kind of seem to be mounting a little bit against us at this particular point now.
Yeah, I mean, in my world, in the monetary policy subcommittee, of course, we're seeing pretty aggressive tightening because of the inflation problem that we have. I did encourage, Chairman Powell, when he was with us the week before the 4th of July break, to have some fortitude with this, even in the face of higher rates and volatility in the markets. Not because I want higher rates, not because I want to see the 30-year fixed rate go up, but because they're so behind the curve. This didn't have to happen. They didn't have to spike rates 75 basis points every month, but because they're behind now, they've got to whip inflation somehow. It's not just a monetary policy problem. It's a supply side problem too. And there's a regulatory side to the Fed, not just the monetary policy, interest rate policy. We don't want them. They've got this new regulator that's coming into the Board of Governors. His name is Michael Barr, no relation to me. But the concern among the banking sector is that he's going to go back to the very restrictive regulations that would make it harder for people to access mortgage credit. And of course, with high interest rates, that would compound the problem. So you've got, right now, I know there's probably not a huge capital supply problem. People can maybe get a loan or they've been refinancing, but I know you've got an inventory shortage big time. So I am focused on, and I want to hear from you all, on financial regulation and interest rate policy, what you all think about all of that and whether that's really slowed down transactions yet. In terms of the inventory shortage we've got, there's one bill I'll bring to your attention that I co-sponsored. I think you all support it. I know the architects support it. The home builders support it, which is that YIMBY Act, which ties HUD money to communities that focus more on zoning rules that allow for more affordable housing construction. The idea being it's mainly a local issue. We've got this challenge obviously in Lexington with urban service boundary, but the idea behind this bill is to, and most of these, these are local zoning issues primarily, but the idea is to create a federal incentive for more construction-friendly zoning, basically. We do. We need land use planning to keep our communities, looking nice, but we just have a huge shortage right now. So that is a bill. I don't know if that's on the NAR's radar, but that was a bill that I co-sponsored. I haven't talked to Rochester or Jamie about this bill that they've got in the House. That's your priority, the housing supply and affordability. So this is new to me. And I don't know, Megan, had you heard about this bill? Had anybody talked to you about this bill? I'd not heard of it until just now.
It's HR 2126.
No, no one has spoken to us about it, but I saw your documents this morning and I can do a deep dive into it and reach out to their staff.
So it's tax credits.
Brian, would you like to talk about that, where that
Yes,
bill
sir.
is now?
Absolutely. Yeah, Mr. Barr, this is obviously a tax incentive bill that we have that is actually one of the most bipartisan tax incentive bills that is actually out there. What it does is it incentivizes private investments, and actually they will not receive the tax credit until the actual revitalization of these underserved or underutilized communities is complete. So essentially it is a public-private partnership. That's the way that how we view it. We estimate that about 500,000 homes will probably become out of this bill just from the investments that we have in it. And the thing about it is kind of cool is it rehabilitates owner-occupied homes to pretty much build neighborhood stability. So that's kind of the basis behind the bill. Mr. LaHood has been kind of running point on Ways and Means with us here. And I know Mr. Kelly has also been pretty supportive as well on it. It's I would argue it's the most bipartisan bill that we probably sent over to you that has the best chance of potentially getting through. Haven't seen any movement yet in committee, but we've been still working with it, and obviously, and we all know that Mr. Brady's tax credit policy is a little different. But we went in, we talked with him. He was receptive, understood. But we're still working our way to try to get something done in the committee process as well.
And Ryan, Darren is a co-sponsor?
Yes, sir.
Okay. All right. Well, I will talk to Darren. He's a good champion for you on Ways and Means for sure.
Absolutely. Thank you, sir.
Thank you. So that would, just the revitalization and rehabbing would help with the inventory issue. I mean, you need new housing.
Yeah, it's unfortunately what we've, our Realtor Community Housing Foundation, which does a lot of nonprofit work here in Fayette County and surrounding areas. We partner with Habitat for Humanity, who really can't build new homes in Fayette County anymore. They've transitioned almost all of their operation to housing stabilization. The idea of hey, if we can't put more units in the ground, acknowledging that we desperately need more units, but if we can't do that, the best thing we can do in the short term is stabilize what we do have. Because we have an erosion of housing supply across the country, particularly in cities. So this is an opportunity to stabilize that housing while we deal with the very real problem of how do we put more inventory in the ground.
And what's tough about Lexington is, they always talk about infill redevelopment and I talked to PG Peoples with Urban League about gentrification. So there's this tension. Yes, we need this, but then there's a concern that, well, if you upgrade the neighborhood too much, you displace people. So that's a tough problem.
It is.
And you make it impossible for people that are on a fixed income to deal with things like the property tax increase that occurs naturally when one part of a block gets redeveloped and it raises the value of the entire block. You're forcing people to sell who might otherwise have planned on living there the rest of their life.
Yeah. Have you heard of this seller financing? Seller financing is a movement that could keep people in their homes. So it's unconventional credit. It's not bank credit, but it's where it's not like a
It's not reverse mortgage.
no, it's not reverse mortgage, and it's not a what do you call it, a land contract. It's not it's not that. It's where the seller actually finances, and it's a less expensive form of a mortgage for a lower income
This is to allow a lower income family to buy.
or stay, yeah, in neighborhoods. But anyway.
So there's HR 5041 is a revitalization of shopping centers. It
Okay.
actually would take commercial properties and convert them to residential properties. That's what that act would do, would incentivize that.
Okay.
And I honestly, we had looked at this in DC and I don't remember the details of it. I don't know.
You're exactly right.
But I don't know if, Ryan, if you want to talk about that one?
Yes, sir. And this is the shopping malls one. I'm so sorry. That's what you're talking about.
Yes.
Yep.
Yeah. So essentially, as you mentioned, we need more housing units, and some of the ways that we've been looking at trying to alleviate this, because we are 5+ million units behind, is converting some commercial space that's already built, existing structures, and moving that over to create residential units, whether it's single family condos or townhomes or whatever it may be. This mall bill, it's only been done, I think, twice, but it's looking to be actually kind of neat. So it's taking these old abandoned malls that already have existing structures, going in and refurbishing them, taking whatever Foot Locker or Barnes and Noble that were there, basically knocking them all down and renovating them to create housing units in there. And so essentially, it's a big community within a shopping mall. So it's actually been kind of neat, a little bit outside the box. We're trying to just come up with as many solutions as we can to increase the housing inventory, and obviously increasing housing inventory is going to help with the affordable issue that we're having. So that is kind of the basis behind that bill. That is one of your true tax credits, a little bit different than when we were talking about Neighborhood Homes Investment Act. But yeah, that's it's a newer bill that Ms. Bordeaux dropped. Still working on getting some more support for that one as well, sir.
So while we in the 6th district don't have any shopping malls that probably would be eligible for this, we do have office parks, that are underutilized. And Louisville, of course, has this issue. So if there was any way to convert commercial space. Now, you mentioned earlier about whether the interest rates have had an impact on the market, and they have. The market has slowed a little bit, but we have not solved the inventory shortage.
Right.
That problem is still there. And I don't know about the rest of you, but I've seen an uptick in the market in the last couple of weeks as people have gotten used to the new interest rates and realize they're going to be here for a while. And so activity has continued, has actually increased. So
Yeah,
I think we've still got this problem with shortage.
I was talking to a realtor, one of the realtors, and they said, yeah, the inventory is so short that the higher interest rates has maybe slowed down by a couple of weeks, but it hasn't stopped. It hasn't stopped.
I don't know if you'd say a couple of weeks even here.
Yeah, I during the pandemic when the market was, despite all counter winds, was still, going as hot as it ever has in the real estate world. I remember saying, if you all lost half your buyers today, would you still have enough buyers to take care of every listing in the marketplace? The answer was a resounding yes. And we're well short of the buyer population being cut in half, but the buyer population has shrunk, but we still don't have anything near a balance. And we've seen a slight uptick in days on market, a slight uptick in months of inventory, but prices have not slowed down. In fact, prices are continuing to grow, at least year over year relative to this month last year. Now, if I were to go week by week or month by month, we've probably seen a slowdown in the growth rate. But there doesn't really seem to be any indication that
Home prices are still
that things are going to ground to. I don't think they're spiking anymore, but they're still growing.
Because I sell in a more rural area than Lexington, one of the things that I think is affecting our market is the gas prices. We're not seeing the numbers of people who are, moving from out of state or other places who said, I don't really care where I live. I just want to, I want so much land or a house without close neighbors or something. You're not seeing as much of that now. That has really slowed down. And that's driven almost entirely by the gas prices, not by the interest rates. A lot of those buyers were actually cash buyers or a high percentage of cash buyers. What I'm seeing now is VA and FHA rate loans are going up, but the cash buyers that were coming in from out of state are not there. Yeah, not like they were.
Yeah, all cash and no inspections, I'm hearing. I mean,
That was happening. Yes.
that's incredible. There's no inspection. I'll get that. I guess if you're in desperate need of a house.
Well, if you're looking at 27 offers and one of them says they don't want an
Right,
inspection,
exactly.
then
That's where the market is.
Yeah,
So
that's where it works.
But you have lost buyers. The interest rates have, it's all relative. So their price point, while prices are not escalating at the same level as they were, they're high. And as rates have gone up, those individuals are qualifying for less, and there wasn't any inventory there.
So the difference in a $200,000 house, I believe I saw this not too long ago, a $200,000 house with the rate increase that we've had is about $800 a month in buying power. And so you're going to lose buyers because of that, no doubt about it. Add to that what are we at now, $4.79, I believe, something like that on gas. Add that price to it, and you're going to lose that many more buyers who just can't put it together to be able to buy. They're going to have to rent. Of course, now you're paying somebody else's mortgage instead of your own when that happens.
Well, what about grocery price? I heard the other day it was up 11%, but I definitely believe it's up more than that. And, when you go, I did hear where they said the average family was $469 more on things, groceries, deodorant, just all kinds of things a month. When you go taking all that in, if that is correct, that takes on.
The number that the Wharton School put out was $5,500 more for the same goods and services
A year
a year
for
So
a family.
for a family. That includes fuel. That includes fuel, groceries, everything.
So last year, we had this problem with rising cost of building materials. Building materials have dropped significantly, although we still have shortages, supply shortages. I mean, we waited, I think 6 weeks, we were remodeling our bathroom, waited 6 weeks just to get fixtures for the bathroom.
Yeah.
So appliances are in short supply, but the price has come down some on that. Problem is, you're not seeing people running out here and building houses now like they were trying to do last year. That has slowed a lot, the construction. So that's going to just add to the problem of availability.
Delay,
Yeah.
yeah.
Well, and then the new individual that's coming in, you said was going to be more restrictive on credit,
No doubt.
possibly.
Well, higher capital charges for the banks, and so that means less, that means banks can't deploy capital,
As much.
especially to, riskier credits. So you could see, I don't know if you're seeing now, but you could see a contraction in the type of home buyer and their ability.
But see, we've been arguing for a while that the restrictions that are put on buyers right now are a little bit too restrictive because they don't take into account some of the things that a buyer or let's say a renter uses to build credit. For example, if they pay the rent on time, if they pay their utility bills on time, if they have 3 different utilities in their name and they're paying those bills on time, those things ought to be taken into account.
Right.
What I'm hearing you say is that we're probably going to go in the opposite direction of what we really want to go.
Correct.
And tighten that down.
We did a little bit of a fix thanks to you guys. You supported the bill that I included in the S2155, which modified the qualified mortgage rule for some home buyers who were able to, the lender could portfolio that mortgage, keep it on, retain that risk, not churn it into securitization, which was really the cause of the financial crisis. But then allow that equity to build up, and then they could sell it onto the secondary market, which made a lot of sense and hopefully expanded mortgage credit access. But just back to your priority issues, this one that's the conversion tax credit, which is the Gomez bill, that one does look like it could help our district. Maybe more than the malls, because you said we don't have malls. Although I would like, Ryan, I would like to know what the Commercial Real Estate Finance Council, are they backing this?
I believe they are, sir. And I'm before I 100% tell you, I would like to check that. But we did work with MBA on the bill as well. We did kind of narrow the scope of this bill to, we know the CBO score would probably be a little tough on it. So we narrowed it in scope. But let me get back with
The reason why I asked
Megan
that
and get
question
you an
is
answer.
because the banks that finance and a lot of the commercial real estate finance groups out there who have done these malls over the years, who finance these malls over the years, they are looking for creative ways to, get out of these malls. I mean, a lot of them are CMBS or whatever, and they, this could be a creative way to solve 2 problems all at once. One mention to you guys in Lexington, this qualified office conversion, it's not just office buildings in Lexington, it's these old distillery buildings. The distillery district, did you talk to those developers about what they wanted to do? And I don't think the financing would work. And I'm just curious if the financing would work if they had this conversion credit. Because down in the distillery district, they had this massive old distillery building and they wanted to convert it into affordable apartments.
And that's gonna be a U-Haul, I think, last I heard. So that's unfortunate.
Yeah, I mean, I'm wondering if
I think they have to do something about the windows inside on that specific one. Their building regulations would not on it, but
well, if you
If
had a
it's a lot of
conversion
square
credit,
footage and you can't get external windows for the bedrooms, then that's not gonna work.
yeah,
We had a problem in Harrodsburg with some of the Main Street buildings in Harrodsburg. We couldn't get apartments in some places because they couldn't get access to a window.
okay.
It's a good question though, whether that would, it does say mixed use property, so I mean, it's possible we'd have to that'd be a good question to see whether it would work for some of the warehouses that we have around town.
Yeah. Okay. Well, I'm interested in both of those. That you got a few other issues there.
Another one there is the revitalizing downtown issue. That's another one that we wanted to draw to your attention at least. I'm not sure where that one is yet either.
Yeah, that was the conversion credit.
Oh, that is the conversion tax.
And that is exactly what it is. It's
Yeah.
downtown Lexington. It's that old distillery district, you know. And Winchester, didn't you all have a good project? Winterwood came in and did a good project for you guys downtown?
Mhm. And then it's had a hard time getting off the ground with some of the upstairs of the residential worked great. It was a multi-use, the commercial space. Downstairs didn't, but it was nice. It was it was affordable housing, and it's, you know, it has helped get that, a lot of the Airbnbs and some things that are going on down there, revitalized, some of our older buildings, but yes, they did. We have a couple of nice properties downtown that have done that.
So Congressman, what can we do for you?
Just what you're doing. I mean, giving me your ideas. I do think we've still got this. We continue to have this flood insurance thing. We just keep kicking down the road. That's, you know, I need your help, advice on that, and how you can help your clients.
I've been off the hill for 10 years, so we've been kicking that down the road for a long time.
Well, and that's coming up, and I think that's due for renewal it's gonna be done by September.
Yeah. And I don't know, of course, Maxine, as chairman, she had no interest in getting into GSE reform. It was just, but that issue, you know, as we go back into the majority, could come back at us. You know, Fannie is still in conservatorship. You got to do something about that. I thought what the previous director of the FHFA was doing, Calabria, was good. I mean, he was actually recapitalizing. He's trying to recapitalize the GSEs a little bit more. Also, I'm meeting on this Friday in Cincinnati with Andy Howell. And Andy Howell is your CEO, president of the Cincinnati Federal Home Loan Bank. So on the back end, you know, as your realtors are trying to move properties, you know, he buys a lot of the mortgages that are originated here in central Kentucky. So if you all have any feedback that I can give to him. I mean, your main issue is inventory, I know. Inventory. You know, I'm just, you know, the mortgage credit, mortgage finance, not really a big problem for you guys right now. We got through the mortgage interest deduction, not unscathed, but not as bad as it could have been from your perspective, right?
Not being taken as often as it used to be, but we're glad it's still there.
So there is another issue kind of related to mortgage, and we talked about earlier about the number of FHA and VA loans that are coming up. One of the problems that it has an impact on when you have a shortage of inventory and you have a high number of buyers that are trying to use FHA or VA, there is a tendency for sellers to discriminate a little bit against those types of loans because of the appraisal process that goes on. And I don't know if there's some way to get that relaxed a little bit.
Appraisals on
FHA and VA loans.
To put a finer point on it, they're just not as competitive. You know, an FHA or a VA loan or a USDA rural housing loan against a conventional mortgage buyer, it's just not as competitive.
From the standpoint of the seller, from the standpoint of the buyer, they're great loans.
Right.
And usually as much as a half.
Sellers don't want the hassle.
They don't want the hassle.
And there's so many other buyers out there.
That's right. Why would you take a VA loan over a conventional loan? And I'm a veteran, you know, so I'm very sensitive to this issue.
Is the appraisal process the big problem with it?
It's the appraisal.
It's a huge problem.
Yeah.
Because
If
there's
I may-
so much discrepancy.
No, go ahead. Sorry.
Well, it's just, as you're stuck, basically, if that seller takes an FHA, especially an FHA deal, and that appraiser comes in low. Just had one the other day. $20,000, $22,000 low. And a house 2 doors down had just sold $25,000 higher. The appraiser would not change. The seller stuck with that appraisal on an FHA loan for 6 months.
That's right.
6 months. They can't, and you can appeal it. And we appealed it, provided the comps, the appraiser wouldn't boo. And that happens.
So he has to take the house off the market?
Well, or if he goes to sell it, he has to sell it to a conventional buyer or a VA buyer. But on an FHA deal, he's stuck with that appraisal. So that's an issue, because if you appeal and that appraiser doesn't see it your way, which a lot of times they don't, you're stuck. And the appraiser gets stuck, or the seller gets stuck with that appraisal on an FHA deal.
And they don't realize it.
And a lot of agents don't realize it.
They don't realize that.
You're
for
stuck.
6 months.
You know, you can't, you can sell it conventionally. And we've had conventional appraisals come in low and flip to a different lender and get another conventional appraisal, and we're fine. So appraisers, there's inconsistencies, but
we put appraisers on a pedestal as if it is a very subjective or objective process. In fact, it is a very subjective process. Yeah. And you can get a different appraisal and have a radically different outcome. But if you get a low appraisal on an FHA, it is in the system for a while, and another FHA is not going to be able to buy it because that first appraisal.
It's already been assigned to case.
It's already been assigned.
So with that case number being assigned, you can't change it.
We have a problem now that's coming down the road with appraisals and the civil right. It's what they're saying is I was taught the years 40-some years ago, it was location, location, location. That is out the door. And right now, appraisers are getting hit with, did you discriminate on his property because it wasn't in the location of his property? And so we're seeing appraisers. We don't have very many appraisers right now.
We're very short on that.
Very short. And this is something that's coming down, that it's a civil rights thing, that's a movement.
Some of the comments and things that they're making, they're having to go back over their comments because they're biased comments within the appraisal itself.
But it's the way that it always, if you were in the area of Greenbrier, then, the houses there would sell more maybe than somewhere else. But you can't do that anymore. It's taking a lot of appraisers out, and a lot of them a lot of training. So we're gonna have, I think, from what I see, a housing appraisal shortage in the next little bit.
I think we had a hearing on discrimination in appraisals. I think we did.
I'm sure you did. It's become
It's a hot button.
And the reality is, there's a lot of evidence to suggest there has been a long-term historical bias in the appraisal process that goes back decades. And we're gonna have to grapple with that.
So there are types of discrimination in which, if two houses in the same neighborhood, somebody goes through a house and discovers that a particular type of families in that house, and there's another house just exactly like it, and he appraises this house lower, then obviously that's discrimination. And that's what we're really targeting when we talk about trying to fix the appraisal process. The problem is appraisers are a little bit scared right now because of this focus that's on it. And so you end up having some of the things that traditionally, like if you have a house that's close to a railroad track and the same house is in Greenbrier, two identical houses, obviously they're going to be different values because the buyers are not going to pay the same money for those two houses. And so that makes it more different process. So, and I don't know what the fine line is, but there has to be a way to address this issue of fixing the appraisal bias without damaging the housing market.
Right.
I think.
So Mr. Barr.
Ron, did you have anything to add?
Yeah, I had a few things. I'll go back to number one on the VA lending. Mr. Reschenthaler and Mr. Kilmer did a bipartisan letter to the VA trying to help streamline that loan process. I don't have the letter in front of me. I'm not sure if you signed on to it or not, but I know that you're probably a supporter of this. Ever since we worked on financial services together, you've been one of the biggest advocates for access to capital and credit, and we thank you for that. But in that letter, we tried to get everybody within the room was spot on. veterans come in last, and that's not what we want. We are trying to help our service members transition from active service to the civilian lifestyle. And it's been very tough on them. Cash is king. In the last 2 years, it's been very tough to compete with cash. The low inventory has made it very anti-competitive for veterans in particular. Once if there was no cash offer, go to conventional financing, and then unfortunately last place would be the veteran loan process. So we've asked them to streamline some process, amend their appraisal requirements, allow veterans to be able to waive contingencies to negotiate and even buy second homes if they're well credited and capitalized. So we've trying to work with the veteran with the VA. We have yet to get a response, but we know how that goes. I wanted to just kind of tell you that up front. On the other side, on the appraisal stuff, Ms. Waters did indeed, in that PAVE report, want to essentially regulate appraisers even more. A lot of our members at NAR are appraisers. And in particular, she wants to pretty much build another government agency, very similar to how the CFPB was, to regulate appraisers. So you can imagine we have a lot of concern about this as well. Again, we've been trying to do everything we possibly can to make sure everything is there's no discriminatory practices in the appropriate in the appraisals, but unfortunately it's sometimes they try to make examples of people, and this is kind of where we're at right now. But we have been talking with the chair's staff to try to mitigate some of these new regulatory burdens that they're going to try to put on the appraisal body. But that's kind of
is that bill going
we've been at
anywhere?
right now.
Is that bill on the
I
markup?
don't. So it was an idea. It wasn't a ledge hearing with a bill. I know that she recently sent a letter to Secretary Fudge and Rice and Taylor about Biden's task force on appraisers, but that's kind of where I think it has been now. I don't believe that there's anything in text, but I can try to double check and follow up with some of my colleagues at NAR to see if I can get something on that. But I would be sure to send it over to you if there is. But that obviously we have some concerns on that. Again, it just slows down the process even more so. So, but I was listening to what you were saying earlier, and in everything that you are saying, obviously it's been pretty much fantastic. But again, just where we're at, we have low inventory with the mortgage rates increasing, with home value being high and still maintaining high. Our buyer confidence is very low. We have had 6 consecutive months of slowed down home buying. It has picked up yet a little bit in some areas, depending on where you are in the nation, but it's still tough. And we're trying to do everything we possibly can. I know that you have been an amazing champion in the monetary policy space, and it's been awesome to see you work as a subcommittee chair on that as well. But the raising the rates so sharply, it crushed it. And people right now are very nervous about recession, inflation. And that's where we've kind of seen some buyers we used to see 12 offers on a house in 48 hours. And that has kind of dwindled off a little bit. So anything that you can help in that space and on housing and insurance or at the full committee level, we genuinely appreciate everything.
Thanks a lot. One question, you talk about, veterans and housing. There's also a bill that's out there that I don't know if you all followed, but it's my colleague Rutherford, John Rutherford. And he's got this bill, you know what I'm talking about, Ryan? He's got this bill, and Megan knows, for first responders, I think.
The Helpers Act. Yes, sir. We are supportive of that bill.
You are, okay.
Yes, sir.
And I'm just curious where, McHenry and French Hill are on that, and what you all assess it would do to FHA.
Yeah. I'll have to talk with Helen Devlin, who obviously everybody in the room probably knows Helen. She's amazing. She's been talking with Mr. McHenry on that. So I'll find out exactly how the committee thinks on it. I obviously know that our friends at MBA have been a little bit different on that, taking away mortgage premiums or just for first responders. And I believe it's first responders and teachers. I believe that's what the Helpers Act is. So, I'll have to actually talk with them to see exactly where they're at on it, sir. And I'll get back with you. But we are supportive of the general base text that we saw from the office when they reached out.
Well, I really appreciate you guys bringing these to our attention, and especially Megan, if you could kind of follow up on the these bills that they've brought us, the housing supply and affordability that LaHood is doing, and then this conversion, the office conversion tax credit is pretty interesting for like downtown revitalization. That's
Look at the big lot stores that are empty, and is there something we could do with it?
yeah, and I would also check in with the Commercial Real Estate Finance Council to see like if this would solve their problem on the shopping centers. You know, the CMBS that owns these dead shopping centers around the country, and if they could convert that with this guarantee program, that could solve two problems at once.
Congressman, Alan Blevins had a question about it.
First of all, thanks for some of the infrastructure money but I'm speaking more for rural areas right now.
Yeah.
So, infrastructure for development, skilled labor force, that's all over the country. And then just a broadband. I know there's a lot of improvements, but those things bring people to our community from California, whatever, if you don't have good broadband. But that's an issue all over, I would think. The infrastructure, Senator McConnell was in Montgomery County a few weeks ago. He said, I'm glad you got it, spit it away, I wasn't for it, which we understand. You all have a large burden there, and where does it all come from, and what are you gonna do about it? But infrastructure, but if we have the best infrastructure or whatever, we still have a skilled labor force to go out and build the homes in a quality manner.
Right. Yeah, that's a huge issue with labor supply. Broadband, there's a lot of money that's there now because of the COVID and ARP and everything. And it's now, at the state. And now the issue is getting it out in the right way so you don't overbuild and it gets, we just did a really effective grant with that I supported with Scott County. You think Scott County is, Georgetown growing, the fastest growing county in the state. There's still a lot of rural areas in Scott County, and Joe Pat Covington, the judge there, he was like a dog with a bone and went out and got that grant. And they partnered with Spectrum, I think.
Right.
So you have a little bit of public money and you can leverage that with the private investment. So Montgomery County needs that. The thing we gotta watch with also infrastructure is fight for Mercer County, Montgomery County, Anderson County, Clark County. I'm from Lexington, but it's the rural areas that get the short end of a lot of that. So, making sure that the infrastructure goes to these rural counties. They brought back, just for this time being, and maybe they'll keep it, the community funded projects. And I actually I've seen the light on this. I'm now a convert. I believe in these things because they used to call them earmarks. And earmarks, the way they were before, were wasteful. There were bad cases. There were bridges to nowhere and things like that. But they've put some guardrails on them now. And my view is I can't go get infrastructure projects for rural Kentucky if I just go to Secretary Buttigieg and ask for a grant. I just can't. I've tried it for 10 years. We finally got one for Bourbon County, but that was, Elaine Chow was there, that was helpful. So, if we can, and we've delivered some infrastructure projects in just these 2 years where we had it back. And I told the industrial authority over at in Montgomery County that when they're ready for they've got some needs to create that infrastructure for the industrial park out there that we would submit for that.
Working on
The
it.
key is, I don't know if Republicans take back the majority, if they're gonna keep that. I'm gonna argue we should, because the rural parts of the country get the short end of the stick on that, so.
Interesting.
We are gonna have to wrap up,
Right.
sorry.
Am I right?
Is it 10-year appropriations ever? Yes.
Right, exactly. Well, thank you all very much.
Thank you.
Thank you for your time.
Yeah.
Thanks, everyone.
Good to see you again,
Yeah.
and look forward to seeing you in Mercer County.
Well, I hope